All right, and we're live. Monday, Novak News, Bidan and Harry.
Yes,
But-
we're back.
Yes, so last Monday, Novak News for us
For the
year. So we'll be doing a market wrap of Northern Beaches. Stay tuned while we go to the stats, what the sales and rental market has done in Northern Beaches. Harry, how have you been?
Well.
Wow,
We're
very
back.
good. Yeah, that's good. How was the day? Interesting?
Yeah, not too bad. It is quite this time of the year,
Yeah.
so it's
Not
pretty
as stressful and running
expensive.
around as the whole year,
Yeah,
but
that's
has
it.
been an interesting year.
It's been
right?
an interesting year.
Yeah.
It's been a roller coaster. Lots
Definitely.
of ups, lots of downs, both in the sales and in the rental market. So
Definitely.
it's been an interesting market, interesting year.
Totally agree. Like lots of talks of, and the interest rate has been the biggest talk throughout this whole
Yes.
time. Like, oh, we'll wait for it. Oh, it'll go down. Oh, it'll go up. And
Yeah,
weirdly, it has been the same throughout the whole year.
that's it.
And I think that changed a lot of things for lots of people. And I think we'll slowly go down. But yeah, let's start with you, Harry.
Yeah, so rental market. After first year in real estate, it was actually a very not only awkward time to join to start in the real estate industry, but I'd say a little bit stressful. Like I remember at the start of the year, January, February was when I started. Average groups when I started off with my open inspections was, I'd see 20 to 30 groups for a property. Like for a 2-bedroom, 1 bathroom, 1 lock-up garage in
That's a
DY
lot.
for about
Yeah.
$750, $800 a week. And at the time, a youngin starting off in the real estate market it was quite daunting at the time.
Yeah.
But lot of high numbers. I think that just from experience speaking, like right now, I think low vacancy rates was a really, really big cause of that because you had a lot of people. There was a lot of competition in the market at the time. There was just so many rent increases from high mortgages, mortgage prices. So you had a lot of competition in the market, in particular rental market. So we were just seeing 20, 30, sometimes even 40 groups showing up at our open inspection. So a lot of crazy running around, and I would say that it did sort of start to plateau later on in the year. But I don't think we actually saw a plateau up until, I would say, September. So we were still seeing a lot of rent increases. I remember, I think Tina, my colleague, did about 70 rent reviews a couple months ago. Yeah, and that was, and we managed about 350 properties in our pod. So 70 rent reviews was just an absurd amount.
Okay. So would you say right now, like there's not as many rent increases, you're not getting that, high stupid rents?
Yeah, look, I think we're still getting rent increases, and in the rental market, we're always going to see rent increases.
Yeah.
That's just the the general market over time is going to exceed. It's going to go up. I don't think we'll see any stupid rent increases like $100, $150, $200 increases, which I was seeing with my own bare eyes quite often. But I don't think we'll see those anytime unless we go through, obviously, knock wood, another pandemic, which will influence things. But there wasn't too many after that time period, because things did slowly start to plateau. You started to see numbers come down with open inspections, so your level of competition did start come down. But it has slowly. I would say the rental market has overall slowed down.
It's kind of coming to a balance.
Yeah.
I think it's good for renters out there who are still looking to rent. I think now you kind of have that balance. You don't have to fight with too many people. Kind of 100%. Having that a bit of ease. Sales is still pretty pumping.
How's the sales market?
Hand,
what's going on there?
Pumping. Throughout the whole year, we're based in DY, so DY alone did almost 11% growth. Wow. So that's massive.
Is that in houses and apartments, or is that the overall market?
Overall market.
Right.
So
11%.
And that's with interest rate on hold. So
wow, that's scary.
2021, I think that's, with the pandemic, if you look at the last 5 years, it's a bit tricky to go there. But 2021, as everyone knows, rental and sales, they were all like off the charts. They were at the peak. And 2022 and 23, it's when the market corrected itself. And weirdly now, we're at the exact same high. Ooh. So if you look at the last 5 years and we look at the median house prices in Northern Beaches in general, it's pretty much reaching the same level at the pricing in 2021. So the median house price in 2021 was 2.69 million.
Right.
Now it's 2.67 million. Last year it was 2.4 million.
So it's kind of done this.
Yeah. So it corrected, the market corrected itself, and then it went back up again. But all this growth happened when the interest rate was on hold. And like I mentioned before, this whole year, February, the interest rate will come down. By mid-year, the interest rate will come down. By before Christmas, we'll definitely see interest rate cuts. But here we are at almost the end of the year, and interest rates are pretty much at hold. And well, now there have been talks of it going back up again because inflation is going up. They haven't reached the targeted figure, and there have been talks that maybe it might go up. So all those hopes of interest rates coming down and you buying your property might be a bit different.
Yeah.
But at the end of the day, everyone is just doing predictions. No one actually knows what it happens unless it happens. So the market, at the end of the day, it's a buyer's market. Unless a buyer pays a certain amount, the house is not going to sell.
Yeah.
So that's a bit of a thing we have to clear out ourselves, because it's not an agent asks $6 million for a property, just no one just magically pays for it, right? So at the end of the day, unless a buyer pays for it,
the facts and figures for rentals were actually, I wouldn't say it surprised me, but it was quite interesting to see the stats, because this year up until I think in June, July, around August, that time period, houses, the average price for a house per week was $1,565, and that was up 24% this year.
That's a lot.
And that was from at the start of the year just to until July. So that's not even like recently. Yeah. That was within a 6-month period. 24%. And funnily enough, units, which everyone thought units was going to be, increasing. Units were only up 11.7%.
So houses did better.
Houses did a lot better. If you had a really nice $1.5 million, $2.5 million house, around Narrowena, Cromer, that would have rented beautifully if you had a house. So they rented actually
investment then.
Really good investment. They actually rented almost double than units, and that's average prices. So that's taken into consideration 3-bedders, 2-bedders, 1-bedders, all the layouts. Average prices. So that's an interesting statistic.
That's great. I think pretty much I have to agree. We had the same thing. So for sales, January, February are fairly quiet for us, as everyone's just easing in from the Christmas and New Year. But as we move to the mid-year, we are getting extraordinary prices for properties. They were getting great results. But as we move later towards the spring period, which is considered the busiest period for sales, we're getting sales. We sold properties in day 2, day 3, or some even in day 1. But they were not getting that in over the top, over expected figure. They were selling at market value. So at the end, I think that's what happened. It kind of started to plateau a little. Throughout the year, it just increased because everyone were waiting for that interest rate. And once they didn't see, I was like, okay, it is what it is. So if they started, I think kind of some might be frustrated or too tired looking at too many properties, because it's an uncertain time. You literally don't know what to do. And everyone's predicting interest rate will come down, and when it doesn't, it's kind of a bit tough.
Yeah.
So yeah.
Bidan, predictions for 2025. It's a big question.
Ooh, this is going to be very.
We'll do a sales and rentals one.
Yeah. So with sales, well, when people say we're going to wait, I always have a little giggle. I'm wait for what? And they will say, for the interest rate to come down. But the tricky bit is, if the interest rate comes down, there'll be more buyers on the market. If I'm able to afford a $800,000 apartment, if interest coming down, I might be able to go for $1 million. So doesn't that mean there will be more competition in that $1 million range? And if people are not selling in this tough period, why would they sell if the interest is coming down? So that means less stock, more buyers. So it's the old classic supply versus demand.
Yeah.
So I really don't see the point personally why you want to wait for an interest rate to come down unless you want to increase your borrowing capacity. But by the time the property market grows up, you end up paying the same.
Yeah.
So it's always good to just buy it, and at some point it'll just correct itself. It's like right now when you say 10 years back, I should have bought that property.
Yeah, that's it.
The same thing will happen after 10 years. People will say, I should have bought in 2024, 2025, because that's the norm. Property value always goes up. You just have to make the right choice at the right time. But I think next year that the same thing's going to happen. Right now, we are pretty much at the lowest stock for sales, roughly sitting around 500. And 3 weeks earlier, we had 975 properties for sale.
Oh, wow.
So it's
decreased by 100% almost.
Big drop. So that's been a big thing there. So stock rates have come down a lot. Lots of property will come in late Jan to early Feb. But I don't think that will increase much of a chance because people will still like to wait for that first meeting in Feb or in March.
Yeah.
So it is a bit of a tricky period, and I don't want to start anything by saying, definitely this will happen because no one actually knows what's going to happen. But definitely looking forward, I think the market will definitely improve and go much higher because it did increase this whole year with all this uncertainty of interest rate. I think next year is only going to do better.
Yeah. I think in the rental market, I would say in the long term, I think tenants are going to have a lot more flexibility in terms of, rent increases because I think when interest rates come down, it gives, landlords, vendors, owners a little bit more breathing space in terms of their mortgage repayments. And when you think of the tenant paying their rent, it's a massive chain where it starts with the cash rate, then it starts with the RBA, then it goes to the banks with the interest rates, and then that's when it affects the landlords, and then that's when it affects the tenants. So it's kind of like a domino effect if you put it that way. But in terms of landlords paying their mortgages in the long term, when we start to see those rate cuts, it's going to, when the cash rate starts to come down a little bit, then that's going to bring the interest rates down. And then that's when, it's going to give landlords a little bit more breathing space. And then in the long run, tenants aren't going to see those major rent increases. So I think I normally like to allow like 12 to 18 months for that to happen. So it's more of a longer term effect. But yeah, I think in the new year, going towards 2025, 2026, I think that's what we're gonna start to see.
That's great. And actually,
which is good news to hear because I think this year, I think both landlords and tenants, everyone just had it hard.
Yeah,
it was really unfortunate.
Yeah, pretty much neck to neck.
And I think we're starting to see the light at the end of the tunnel going in the next couple of years.
And we being in DY in particular, we know a few good things are happening around here as well. There's a big development project that's been going on for a while now, and I think by next year we might see 4 new buildings.
Wow!
And they'll all have 200 apartments each. So lots of stock is hitting the market coming on the market. But weirdly, most of them already sold. Off the plan. So that's the tricky bit. So there have been 4 big projects going around in the east side. Well, 3 on the eastern side of Pittwater and 1 a bit far up, but more closer to the beach. So, and they're pretty much all sold
already.
Yeah, pretty much. So they are coming, but most of them are sold. Which might ease up a little because it increase this number of stock, and people might sell because they are moving into the new apartment. They might sell their current one. So it might be a bit of hope there as well. But yeah, new stock are definitely coming, and DY in particular sells more apartments than CBD. So.
Oh, that's an interesting
something
one.
Very tricky, and with more new apartments coming, I think it's only going to get better. People might buy it as an investment, good for the renters, or people might wanting to live in. They might sell their house. They might be downsizing. Moving closer to the beach in an apartment. That's always the goal in northern beaches. So I think that's pretty much all from me. Anything from you, Harry?
No, I think that's it. Covered everything. Stats.
Definitely.
Verdict.
So overall, it's definitely been a very good year, and hopefully it's been a good year on your end as well. Never know. Next year you might be looking for your first property or your first investment property or a second property.
That's it.
Lots of things can happen, and pretty much we just want to wish a happy New Year
Happy New Year, and I hope you all had a lovely Christmas. All the best.
Yeah, definitely. All right, signing out.
See you later.